Greetings, members, one and all of the Salivation Nation. Gold. Trends investors and buyers should be watching. Let's explore. Yes, I'm using both of those terms for a reason. In the last and final in the series of infographics presented by Gold Corp. This is an infographic series that I've just recently discovered, but I thought it was quite intriguing. But as you can see, it is quite dated, because here we have gold for 2014 and beyond. So this video is going to be separated really into two parts. One is to see how right they were or not in terms of the trends from 2014 and beyond. Something that's almost 6 years old now, and what kind of trends there will be for the future that I see happening in the marketplace today. So here we'll start with this here in the fifth final in the series of Gold Facts and Graphics. As it is often said in investing, trend is your friend, and that's very true. But gold itself we don't see as an investment, but as we buy it with the understanding that it will preserve our wealth for the long haul. It is something to protect us against an ever falling dollar and economic insecurity. And also the unknown as well that can affect markets for sure. So here we can see with the trend as your friend, there's four major gold trend investors should be watching: Chinese buying, Indian demographics, debt and currency, and gold discovery trends. And let's see how these are playing out here. First, we have Chinese buying. The World Gold Council expects Chinese demand to rise about 20% over the next 4 years as an increasing population gets wealthier. And I believe this probably has happened, although I've not looked at the hard numbers, but we see Chinese certainly are buying a lot more gold for sure. And we're seeing that not only are the general populace buying gold for cultural reasons and the like, and as they get wealthier, as Chinese economy expands, but also the central bank of China is accumulating more gold. However, as is always the case, it's hard to really trust numbers that can come out of China to know exactly how much is there or how much they have. 54% of gold demand comes from China and India alone, and that I certainly can believe for sure, especially considering the cultural significance that gold plays in both of their cultures. So here we can see of where Chinese demand is and where they project it to be in 2017. Was it there? Again, my guess that it probably has passed that level, and probably more so. 1,132 tons and 1,350 tons 2017. So there's three reasons for continued demand increase, and I believe this is what has been happening for sure in China. Rising real incomes, deepening pool of private savings, and rapid urbanization. However, as a caveat, we have seen many buildings being built in China, and many of these cities around the nation that are basically built and remain empty to this day. So some of this may or may not be real or what have you, but nonetheless, it is interesting to see how these trends are going. Albert Chang, who's a managing director for World Gold Council for the Far East, says that whilst China faces important challenges as it seeks to sustain economic growth and liberalize its financial system, growth and personal incomes in the public's pool of savings should support a medium-term increase in the demand for gold in both jewelry and investment. And we have a trade deal with China that will probably be wiped out null and void under a Biden administration, and my guess is probably they will be enriched by the United States further ahead, so things will probably continue as predicted here before a Trump presidency. And Chinese consumers are not the only people in China looking to buy more gold. There's a 500-ton gap and China's gold consumption data suggests that their central bank has been bulking up its holdings. And we pretty much know and believe that is the case, and they are doing this. They are a mysterious central bank, as you heard me talk about before. Data is hard to come by, accurate data from there. The last time China announced its central bank holdings for gold was in 2009. It announced that it had boosted its reserves by 76% through quiet buying over the past 5 years. Today, many analysts believe China has between 2,000 and 3,000 tons of reserves, but no one knows for sure. I probably believe that's still the case to be. According to tickerscores.com, James Fraser, the single most important factor for gold investors to watch is China. They are accumulating large amounts of physical gold for a strategic purpose. In the future, they will back the yuan with gold. Will they back them? It's a question. It's not saying that's happening. There was a big debate here in the community about that. They think that there is a petro yuan or a gold-backed yuan, but there was no evidence to support that. All speculative. And that's, you have to be careful where you get your information these days, not only coming out of China, but also people who interpret other data for their own purposes or what have you, or agendas. And then we have the Indian demographic. Indian consumers bought 974.8 tons of gold in 2013, which accounted for 25% of global demand. That's just the tip of the iceberg. Indian demographics and future wealth growth serve as one of the biggest drivers of future gold market potentials. So the median age range from 2014 for male and female, 50% of India's 1.27 billion population, we can see that demographic there. And more than 50% of all Indians are below the age of 25 years old. And I know this from all the scammers that call me from India. They do sound quite young, 19, 20, what have you. 65% are below the age of 35. And so great amount of population is young, and they're going to be open to myriad of different things and technologies and the like, and for sure, and adaptation. But also, I wonder about the significant cultural significance of gold. Could it disappear? Who knows? But this says in 2020 the average age of Indians will be 29 years. And according to this chart here, they're the youngest demographic there as far as the median age, which means that maybe their healthcare system isn't as such to where median age could be higher. Japan, it's 48 years. Europe, it's 42 years. And the U.S. as a nation is 38 years. China is 37 years. Every year, tens of more millions of Indians enter into their prime marriage and wage-earning years. The average age of marriage in India is 22.2 for women, and men it's 26. We'll see why that's important here. Also, between now and 2050, it's expected more than 350 million Indians will be born. U.S. global investors Frank Holmes says the most important demand trend for gold comes from enduring love trade. And that is what it's about. The love trade is what I call the cultural affinity for the precious metal, particularly in Asia, India, and the Middle East. Coins, jewelry, and gold bars are purchased for religious and cultural celebrations year after year, and the trend remaining robust, especially in China with this. So apparently it is still strong, will continue to be. You've heard me talk about in between the publication of these infographics and now how shift in India has moved towards silver when gold price got too expensive. Of course, I don't know how that is now. We've not seen a whole lot coming out of India, what their demand for gold has since July of this past year when gold broke record prices and nominal price for gold here. The next big one is debt and currency. Let's see if they got this right. The Wall Street Journal estimates total world indebtedness at $223.3 trillion, or 313% of global gross domestic. Yes, look at that. Wow. The U.S. alone has totaled per capita indebtedness at $176,833, including all public and private debt. And I'd say that's more than that now. And this includes a whopping $17.6 trillion of U.S. government debt. So that's including where we at now, $10 trillion more than that. And so we are much higher in that regard, per capita, per taxpayer, and as a whole in the debt and deficit spending. So debt leads to currency debasement by governments. If each dollar is worth less, it makes it easier to pay back that debt. Yes, indeed. And we have emerging economies, private sector, external is 9%, financial sector debt is 43%, household and corporate at 34%, and public is 14%. And in developed economies, we see financial sector, household and corporate is 41%, and public is 29%. So yes, indeed. That's for developed economies versus emerging economies, or third world nations, as we used to call them. And then Bob Morarity from 321gold.com, all debts get paid. They are paid either by the borrower or by the lender, with new records set for worldwide debt on a daily basis that can only end badly. And the everlasting truth is you can't print gold. That's for sure. Yes, indeed. Global money supply has skyrocketed, though it has dipped back in recent months. Of course, it's not true now. It's going to QE to infinity, for sure. Gold price per ounce, combined balance sheet in trillions. The Fed, the European Central Bank, Bank of England, and Bank of Japan. And we can see there, gold price up, and it's going up with the currency, which means that gold is doing what it does. And that is fascinating and a testimony to gold. It maintains its value and real price compared to what we see for the currency that's being printed out there these days. And it's happening now, too. And that's well above that average of the $1,800 level. It's around $1,850 these days. The gold price tends to have a high correlation to money supply. The supply of gold cannot be created out of thin air. And that's quite true. That's the one thing that's a cornerstone of why I don't see gold as an investment, for sure. Indeed. All right. So Doug Casey says it's critical to remember that the world has become over-financialized. Entirely too much energy is directed towards paper assets of all types, including nearly $1 quadrillion of derivatives, trillions of new currency units being created annually, and a super bubble in the debt market. It's an unstable situation, and sometime soon, its inevitable collapse will result in a panic into physical gold. Why does he say this? Because gold is the only financial asset that is not simultaneously someone else's liability. No counterparty risk. It is what it is. It exists because of its very nature. Even the physical properties scream in terms of stability. It does not react to anything but aqua regia. And even in that form, it can be reconstituted, such as what happened with the Nobel Peace Prize that I did in a prior video. And this is why I believe that if you're going to have any other kind of monetary system, gold really should be a part of it. If anybody's going to have the kind of faith in it that is beyond just fiat designation. Because what's going to happen if these currencies hyperinflate? People are going to have less faith in anything that comes out or anything that emerges in a reset of any sort that's going to provide any kind of trust, because it'll just happen again. That's why people will run to physical gold. If there is an actual collapse. I don't think they're going to make it collapse, though. I think this is where it's different, especially at the age of the pandemic. This great reset is going to be the last tomfoolery, the last trick they will try to get us on based off of a blockchain or some sort of a digital ledger, and a more move towards globalism. I believe that is where we are headed with a currency system, and in my view, that's all the more reason to have your wealth outside of any kind of financial system, including Bitcoin, which I'm not against cryptocurrencies, but I do think that having hard assets such as gold and silver in your possession physically is is a way to protect yourself. So here we see gold discovery, which is the final portion of this infographic here. Cuts in exploration spending. We're seeing many juniors leaving the industry. The low gold price has had big repercussions on the discovery and advancement of new deposits. Development of new projects delayed. Less capital for juniors. And so that is the problem with the low prices. Now we're seeing the trend reverse, though, in that regard. Combine this with the already concerning downtrend in new discoveries. We can see here that it's been down all throughout. But let's take a look here what Exploration Insights Brent Cook has to say about this. The industry is not replacing what it is mining with new economic deposits. Additionally, the industry is slashing exploration, curtailing development, and grading their deposits. We will be facing a severe deficit of new mines, meaning the few higher quality deposits will become increasingly valuable. So what is the median grade of the world's largest gold operations? You can see that trend is going down. The grams per ton is less and less. So in the end here, less money is going into exploration and economic deposits are already hard to find. Combine this with the average grade of mined gold increasing. Quality mines are even more valuable. And so that was their thought back in 2014. What is the reality today? That trend is reversing because of the high price of gold. You've heard me talk about two different mine exploration companies out in Canada, one in the eastern part of the country and one in the western part of the country, that have found sites that hold some potential for promise. They're seeing a lot more of these mine exploration companies out there. You're seeing them being interviewed, some of these CEOs on YouTube, and being talked about like channels like mine and others. That is where the trend is going. We talk about people, how they can invest in gold. That's one way you can do it through junior miners, but you have to be very, very careful with some of these companies because of what this trend is that you've seen in the past. Some of them have gone under. But now with the price up and fuel costs still relatively low, and people putting big money into them, there is some potential. You have to be very careful on who you choose and understand the risk that's involved in it, as well as also investing in gold mining companies in general, as well as junior miners, the big boys and the smaller speculative miners out there. But that is what you're seeing, the trends now. If some of these sites do prove to be promising in terms of their deposits, then this could be really good and also bring more gold into the marketplace, which could potentially, who knows, meet the demand for those who are wanting to get the metal because of the reasons mentioned in this infographic. We have more debt, bigger spending, more currency debasement, and if that's happening, no matter what, there's not going to be nearly enough gold to cover the problems with debt and deficit spending. So the ratio between those two is as such that gold will always be a store of value. So there you go. So that's the trends for investors and buyers, and finishing out this series here that we have done on gold, facts, and infographics. I hope you enjoyed this video. Post your thoughts below and see where some of this has either missed the mark or maybe you've done more of a deep dive in some of the numbers. I'd like to extend a multitude of gratitude to you all for taking the time to watch this video. If you've not seen the prior installments, check out the playlist, Gold, Facts, and Infographics. And I'd like to encourage you to please rate, share, comment, and subscribe.